Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Max Cabasso, Managing Director on Nasdaq's Market Intelligence Desk, for an update to watch on technical levels within the Nasdaq 100 as stocks are hitting new 52-week highs. Max, it's great to see you as always. Welcome back to Trade Talks, and let's take a look at some fresh levels to watch. And I also want to take a look at a 5-year for a little bit longer term outlook.
Sure. Yeah, so we finally broke out to 52-week highs today, and we're over, I think, 15,340 last I checked. So we're breaking out, obviously. Watching those all-time highs as we head into the back half of the year.
And we'll take a look at valuation in a moment, but I want to talk about market breadth because we're talking about concentration risk in just a handful of names. It appears to be widening out a bit, though.
Yeah, we're starting to see. So I think 2 weeks ago. Kind of meta really breaking out, but others are starting to participate as well, and that gap has stopped widening out so much. It's kind of stayed steady for the past week or so.
And clearly multiples have expanded, right, in this run-up that we saw. So valuation is going to come into question, especially with earnings around the corner. What are you looking at there?
Yeah, I mean, we're up at 27x, PE. I know NDX. So again, it's going to be really important for companies to hit the bar and probably exceed it. They're pretty low on again, expectations. So if companies aren't hitting those levels, I think it could be a pretty sharp pullback. But again, the bars have been lowered. So if earnings come in line a bit better, I think we could really see that push towards all-time highs, towards as we head to the end of the third quarter. But if it doesn't hit, it could be a nasty pullback.
Especially with estimates coming in, right? So the bar is lowered, but guidance is everything in this market because, multiples went up in a short time and
very short.
Pretty high at that too.
Yeah, it's going to be. There's been kind of leeway previously where if you didn't hit or guidance wasn't huge, okay, you kind of accepted it, and you saw maybe a 1 or 2 day pullback, and then you started to see buyers start to step in. If guidance is still weak and nothing is changing, I don't think you can justify these valuations. So again, we've seen the technical breakout, but if valuations are as stretched as they are, again, we're at 27x right now, you're probably going to see a pullback. Fed is kind of out the door. We still have one more hike coming, so that kind of overhang is not there. There's not that uncertainty that a lot of companies were talking about. Okay, we don't know what's going to happen with the market. What's Fed going to do? There's a lot of maturities coming up in the debt market, so people are going to have to refinance. So again, companies are really going to have to hit the bar that they set and potentially raise on the upside, for the guidance for the rest of the year, because that's what the talk had always been. They brought it back in, so now again, you really got to hit that bar with the valuation we're ascribing to some of these companies now.
All right, Max, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.